Joining me now, Carley Garner, a senior strategist and broker at Decarley Trading. Carley, always good to have you. Thanks so much for joining us.
Thanks for having me. Pleasure to be here. Plenty to talk about
So,
in the commodity markets for sure.
yes, and I, of course, have to start with this move higher that we've been seeing in gold, coming off a bit today, but reached as high as what, $5,500 an ounce. You've been calling for
Yeah.
a top for quite some time, yet we keep seeing these new highs. Are you still standing your ground, or has something technically changed here?
Well, I think it's fair enough to say that even if gold does come crashing down, like I actually still believe it will, I'm still been wrong. I did not expect to see what we're seeing, and there's a lot of reason for it. I mean, there's a lot of good, solid reasons for gold and silver to be climbing higher. Um, 3 years ago, I was bullish when nobody else was bullish. I obviously turned bearish way too quickly, and there's a lot of things going on here that only time will tell how this actually plays out. But there's a few things that I see that are really, really huge red flags waving. For example, like when I look at the options market, I'm seeing really unusual activity. And what I mean by that is, if I there's a the CME has this thing called its CVol. It's kind of like the VIX but for commodities, and you can go on their website and it's actually free to access anyone that's interested. And you can see volatility in the options markets for gold and silver, and we're seeing volatility that we really have never seen before, with the exception of the financial crisis. So it's really odd to see what's going on in gold and silver happening when we don't appear to be in the greatest financial crisis of our life. Maybe we are. Maybe gold and silver traders know something we don't. But I don't think that's the case. I think what we're really seeing is twofold. First of all, we're in this environment where speculators kind of go viral, right? Ideas go viral, and they're legitimate ideas, but when you have everyone in the world piling onto one or two ideas in commodity markets that aren't deep enough to absorb that liquidity, you get these really, really crazy market conditions like we're seeing. One example for would be if commodity ETFs. There's commodity ETFs that are have good intentions. They're created to bring retail traders to commodities without forcing retail traders to open futures accounts. And I don't disagree with that. But the problem is when these things become mainstream ideas and everybody's asking Chat GPT and everybody's in on Twitter or X, whatever you want to call it, with all the same ideas, and they all try to buy the same commodity, the market's not deep enough to absorb that. Everybody thinks gold and silver are very liquid markets because they're big markets, but they're actually fractured markets. They're bullion markets, they're spot markets, with hundreds of brokers creating their own synthetic markets. The futures markets themselves aren't that big. Silver has an open interest on the CME of about 100,000 contracts relative to the E-mini S&P that has a couple million, or a million to 2 million, depending on what you're looking at. But the idea is the same. These are not big markets, but we have big money coming in, and there's just nowhere for it to go. So you see these kinds of crazy, in my opinion, unsustainable and unjustifiable prices.
Mm-hmm.
But again, I'll admit I'm wrong. I'm not saying I'm not wrong. I'm saying there's some really unusual things going on here. And I don't know when and where it ends, but I think I know how it ends. We've seen this before in commodities just in the last couple of years. We saw it in cocoa. We've seen it in coffee was one of them. I'm sorry, I'm running a blank here, but these types of things happen occasionally. A couple years ago when crude oil was 130 and natural gas was $10, nobody believed we would be seeing the prices that we're seeing today. So just be very careful with this.
What message do you think gold is sending, though, as it sits at, $5,200 an ounce right now?
Well, I mean, there's some legit reasoning. I think when people started moving money into gold and silver, it started quietly under the surface. And I think the major catalyst was when Russia invaded Ukraine and the US put sanctions on Russia and froze bank accounts of not only government holdings, but also citizen holdings of people that supposedly had ties to Putin. And I think people in other countries look at that and wonder if maybe it's a good idea to have all of their cash sitting in US dollar bank deposits or treasuries. And so I think we got this kind of outflow into them looking for another alternative. If you're looking for another alternative in regards to sovereign debt or currencies, the reality is there's really nowhere else to go. Most developed countries are paying less interest on their debt than we are. And it's arguable to, I'm not going to get into politics, but I don't think it's
Hmm.
fair to assume that anyone else's government is any more stable than ours. So I think the solution was gold and silver, and that's how it started. And I think it just kind of is a story that snowballed into what we're seeing today. And we won't know until we know whether or not that was the best move. I'll just leave it at one last statement. We saw this kind of wild rush into an asset in 2020. And guess what that asset was? It was US Treasuries. In 2020, I recall during the COVID collapse, Treasuries spiked wildly. The 30-year bond was trading at silly levels. The yield was under 1%, I believe, maybe 1% at the most. So people were locking in their cash at roughly 1% for 30 years. And they were perfectly happy doing it because at the time, their thought was there's no better place to be than US Treasuries. And now we're getting the exact opposite uh, environment. But
Hmm.
those that rushed into Treasuries didn't turned out not to be doing the right thing at the right time. And so we have to wonder if maybe this exodus out of the dollar, out of Treasuries into gold is also a similar mistake. But, again, we'll know when we know.
What's the level you think gold should be trading at right now?
I'm not someone that thinks gold's worthless. I'm not a gold bug either. I think a reasonable, like when I look at a monthly chart, we've seen gold go into corrections for decades at a time. Most of those corrections are between 30 and 50%. So, I mean, you could probably assume somewhere around 2,000 to 3,000 is doable. I'm not saying that's going to happen tomorrow, but if we're talking a year or two down the road, it could very easily be in that ballpark.
Okay, I want to shift gears and ask you about oil because oil prices hit a 4-month high earlier today. It's trading around $65 a barrel right now. It seems like increased tensions between the US and Iran is really driving that. How should investors be looking at that pop, and are there opportunities there?
From a fundamental standpoint, I'm not necessarily bearish crude oil, but the reality is we've been in a bear market in crude oil for multiple years now, ever since the Russia invasion of Ukraine. Oil's peaked, and we've been working on lower highs ever since. And so thus far, this has been a nice short-term rally, but we've seen this over and over and over the last 3 years, and they've all been temporary, and they've all come back down and either made new lows or at least fell back under 60 55 area. I'll also say I'm not ready to call a bottom in oil yet. Maybe this was it, but I doubt it. This time of year has been wrought with capitulation sell-offs in oil, and I've pointed out I think on this show before. Anytime we're below $65 a barrel in oil, it's kind of like a slippery slope where prices get heavier and heavier, and eventually they just give way into capitulation selling. And I looked over the last 20 years. This is the fourth bear market. The first three ended with oil dropping below 65, hovering for several months, maybe even a year. And then eventually it just kind of gives way and drops to 40. And then eventually it drops below 40, and we get this really big wipeout sell off. And so, maybe Iran or some story throws that pattern off. But if we follow the same pattern we have the last three bear markets, oil's probably going to see some sort of, um, you know, collapse to. I'm just going to throw this number out there. The trend line collapse would actually put us somewhere between $15 and $20 a barrel. So I'm not saying we get there, but I'm saying if we repeat the last three bear markets, that's exactly what would happen. So be very, very careful with oil exposure. Um, it's a political situation, so things can change fast, but there is still a lot of downside risk despite what we've seen the last little week or two with oil rallying.
Oil at 20, gold as much as 50% off. I mean, it seems like that could be some pretty risky bets if those things actually do happen then. So any other commodities you're watching right now that could be interesting for investors or that might signal more risk?
Well, I'm focused on the dollar because there are a lot of dollar bears out there. The sentiment is very, very bearish, and I can't blame them. Look, we sold off last year 10% and then just stuck there and haven't been able to hold rallies. And it looks pretty dire in the dollar. But, you know, and I'll also say there's a kind of a narrative online that there's a 14-year trend line on a monthly chart, and we broke below that yesterday and the day before. And that is true. But I posted a chart to my socials, a weekly chart of the dollar, and we're actually in this really big trading range over the last 5 years or so. and we're right at the bottom of the range. It's held every other time, so we're kind of at the cusp. Maybe everybody's right and the dollar collapses. And if that's the case, gold and silver traders, buying up here, they have the right idea. Stock traders have the right idea because a weaker dollar is bullish for most assets. But everybody's thinking that. And what if the dollar does hold support on this weekly chart that I'm looking at and it manages to move higher? That flips a lot of these narratives completely on the other side. So it's going to be really interesting. So that's what I've got on my radar to see what the dollar does here in the next few weeks. If it rallies, I think we need to really rethink what's going on in some of the other assets.
Okay, and what is that level that we should be keeping an eye on?
In the dollar index, it's 96. So I'm looking at the dollar index that trades on the ICE futures. And 96, markets are messy. If it gets to 95, 94 half, I wouldn't, call all bets off. But as long as we hold in the mid 90s, I think there's a pretty good chance we rebound and again change some narratives.
Okay, we'll leave it there. Carley Garner, senior strategist and broker at Decarley Trading. Thanks so much.
Thank you.